All right, good evening, traders. Well, it's been a long break for me, but I'll share some market views with you, starting with today. I hope all this time you've been trading well and you've been doing better with your life as well. So, we are on a Monday evening, 17th of April. This is 8:25 p.m. As always, I'm looking at three different time frames: weekly, daily, 75. Using 75 from a short-term perspective, intermediate perspective comes from the daily, and larger time frame for me is the weekly. This is the chart of Nifty. I have short-term trend indicators, momentum indicators, RSI for short-term overbought, oversold conditions. Range contraction helps me to understand whether the market is contracted or expanded from a very short-term point of view. And then the most important trigger that I get from the Heikin-Ashi candles. So, what happened today? Thanks to Infosys, we had a knee-jerk reaction. It's like a three-line strike wherein 3-4 days of previous gains taken care of by just 1 day of a down move from the index. Range has expanded, and I see this as a healthy correction. See, the market moved up quite a bit, and it was a one-way rally wherein it kept on making higher highs and higher lows on the daily time frame. If you're in any of my programs, you know that for the last week we've been calling for a slant divergence happening on the 75-minute time frame, which means that the bulls should be cautious here. The view was cautiously bullish. This beautiful run-up bounce back on the daily time frame essentially led to a 3-week bounce back. So overall, some kind of a slowdown / correction is healthy for the markets. The markets was, in a short term, fairly overbought, quote unquote. We've got a range expansion, and thanks to that, the index has created a decent trigger on the downside, which means that any break of today's low going forward will trigger fresh shorts or fresh weakness. Is it possible? I think so, it's possible. Now, if I consider this low, this fractal low, and this high, if I come to, let's say, the fixed range volume profile, and if I drop something like this, let me take it all the way towards today's close, today's trade, then it comes to around 17,790, around close to that 17,840, 850 range comes as the point of control. All throughout this range, we've got some decent amount of volumes. So we can see some amount of supports coming in at 17,600, 17,500 mark. So we'll keep this in mind. The fact that the point of control has come very close to the highest point in the recent high point suggests that there's some degree of distribution, which means that we should be open for any break of today's low for further downside. 17,500, 17,600 is something that we should keep in mind. Anything more than 17,500 would be disappointing. The 75-minute time frame has moved into a short-term downtrend. Momentum is supportive. So any kind of a break of these lows, and we should expect an ABC kind of a corrective move. Can it bounce back? Yes, of course. Anything is possible in the market, but any kind of a bounce back should use today's high as the short-term resistance. Essentially, if I zoom out the 75-minute time frame, what you will see and notice is the first 75-minute bar has essentially created a defined range for the market. The rest of the entire day's trade stayed within this range. So any kind of a short-term directional clarity comes beyond this high and this low. If you want level, then on the downside it's 17,640, and on the upside it's 17,855. So 850, 650 is what you can work with. So view here on the Nifty is cautiously bullish, but if you trade short-term time frames like hourly or 75-minute, you will get shorting opportunities, quick shorting opportunities this week. So keep an eye open there. Amongst the sectors, Bank Nifty continues to show good strength. In fact, Bank Nifty was positive today, thanks to State Bank of India. Auto is showing exceptional relative strength as well and given a very nice bounce back. It has stretched itself, and the CNX auto on the daily time frame looks like a good looking hanging man, a little more than a hanging man if you ask me. And I was going through these sectoral indices, and I generally write down my views. And as I was writing my views on these sectoral indices, one particular word kept on coming to my mind when I saw their daily charts, and that's extended. By extended, I mean that the particular chart over here, CNX Auto per se, has given us a beautiful one-way run-up, and the way the momentum has supported it suggests that it's an extended situation, not good to go long at this junction. Should wait for a short-term correction, but again, cautiously bullish on Bank Nifty, extended behavior on the CNX Finance very clearly. By the way, thanks to few Nifty 50 stocks, maybe because of a basket order, many Nifty 50 stocks had a freakish trade on an opening high, and that's why the CNX Finance chart is behaving like this. I think this is primarily because of HDFC. We'll take a look at it a little later. FMCG. Now, this guy has given you a fresh breakout. The fresh breakout comes from a weekly perspective. On the daily time frame also, it has given us a breakout. This is good news. ITC is definitely playing a role. And today we did notice how the market was kind of hiding behind the consumer durables, the FMCG, when the overall index, the benchmark index, was down more than 200 points. So fresh breakout coming from FMCG. Bullish definitely across the different time frames, so one should continue to look for long opportunities here. IT has gone through a structural breakdown. We've got a pretty good bounce back from the intraday lows, but as I was sharing in one of my quick videos today morning, that when you have a structural breakdown like this, it makes sense to look at the bigger picture. And the bigger picture for CNX IT is essentially these supports, which surprisingly kind of merges pretty well with this consolidation. This consolidation lasted for almost 6 months, and then gave a big breakout, big movement coming in from the IT stocks, and that's exactly where the index finds itself now at the lows. So knocking on supports, yes. Big gap down thanks to Infosys, yes. I would say it's not the right time to rush and buy in your investment portfolio. You may do so if you feel like, but I think it makes sense to give it a little bit of time. Let's see whether these supports hold or not. If they don't, then we'll definitely find better lower levels. CNX Media is buying time. It's very close to its short-term resistances. Looking at this move and the counter move, an opening up on the upside is possible. So keep an eye on stocks like Z and Sun TV, PVR, and the others. And I'm going to talk about metals. Now, metals, I'll say slow and steady. Slow and steady in the sense that it has reversed the short-term trend on the upside. It's now knocking at resistances. These resistances align pretty well with this consolidation, so there should be some merit in this perceived resistance. Slow and steady, nothing fancy. We should keep an eye on Tata Steel. And then finally, you have CNX Pharma. Now, thanks to Sun Pharma, this sectoral index gave a beautiful move on the upside. Now is going through a 2-bar correction, which is fine. I would reiterate the word which I used. A healthy, much needed healthy correction. CNX Pharma has gone through a 4-week bounce back. So after that, some kind of a slowdown is necessary for higher upside. So most of the sectoral indices are cooling off, correcting from an extended behavior. FMCG has given a beautiful breakout. Metals is slow and steady, but talk about finance, Bank Nifty, auto, and just now we spoke about pharma. Most of them, even real estate, most of them, all of them are in an extended situation, which means that maybe for the rest of this month, our strategy should be very, very selective. We will get opportunities, I think, on both the sides of the market. We need to be really good with our stock selection, our sector selection. So I would suggest keep a view, create a view on the Nifty, look for some sectoral opportunities, and then intra-sector look for some stock opportunities rather than stock first and index later. I think a top-down approach will work better for the rest of this month. As we kind of discuss markets today evening, quick look at the global markets is suggesting SGX is 21 points negative, nothing much. The US markets are flat to negative positive, completely flat. In fact, it's also taking a breather after the recent bounce back. Same readings coming up from the European markets as well. So not much of a direction clue coming in from the global markets. SGX is just 26 points down, trading at 17,737. I did talk about State Bank of India, which played out, I think, a very important role. In fact, why open here? Let's quickly come to this section wherein you will find sectoral stocks, which I track the most liquid and the ones which matters, the heavyweight ones. Now over here you can see SBI is up 2%. That's the biggest gainer amongst the top stocks, which makes up Bank Nifty, a clean breakout. And there happens to be a small little gap, a falling gap here for SBI. I have a volume profile drawn already with SBI, and it suggests that this move, if it sustains, should take us close to that 560 mark. So one important index heavyweight supported, wherein HDFC and HDFC Bank were the ones which, as you can see, I spoke about that freak move on the upside, and you'll find it in Axis Bank, ICICI Bank, HDFC Bank, and that's the reason Bank Nifty behaved like that. I would like to talk about one particular stock which has been coming off significantly over the last few quarters. But before I go to the stock, I'll just quickly summarize our view on the markets is cautiously bullish. If you're an intraday trader, keep your eyes open for shorting opportunities as well. I'm quite sure tomorrow, day after tomorrow, you'll get them. For the rest of the month, I will suggest be very stock specific and not completely biased on the upside. So we might get opportunities on both the directions. We just need to trade a little bit more carefully. I'd like to talk about a stock which used to be one of the favorites in the market, Jubilant FoodWorks. Now, big time underperforming counter, big time. We can see that it has gone through stages of structural corrective move, and at the current juncture, it's going through this kind of a falling wedge behavior. As it's falling, the underlying momentum is improving. I like these kind of stages in the market which calls for buying at relatively much lower prices. Sub 440, it's trading at 431. Short-term trend and momentum has just kind of improved. My Heikin-Ashi charts have started to improve their look as well. I think that going forward from here on, the chance of 500 is, or the probability of 500 is more than the probability of 400. It can come down and retest these lows again, but a falling wedge like this in a falling market, as I see my momentum indicators slanting up, not a bad call for a cash market position. We'll track this, we'll see how it behaves. What I will do is put an alert at today's high. That will be the first trigger for any kind of short-term momentum move. Then 450, that's exactly at these fractal highs, and then 465. So you can use today's high, which is close to 440, 450, 465. These are the three levels that I'm looking for on the upside for Jubilant Food. This entire expectation that this wedge will open up on the upside will completely go for a toss, will completely kind of negate if these lows are broken and close below it. You know, many a times what happens is important supports gets breached, broken, and immediately it reverses. I call them traps. I have a term for them. We call them flush outs. It essentially flushes out one side of the market. So can it come down to these lows? Highly possible. I don't know what's going to happen. If it comes down close to these levels, it can break and continue to fall, so weakness continues, or it just breaks and flushes out the weak hands, the last sellers, and then bounces back. Possible, but as I said, this wedge ideally should give us a breakout. You put a trigger at 440, let's see if it takes out 440 on the upside or not and sustains. But there's a lot that the stock has to do to show strength. It's just a very interesting pattern that I kind of recognized on the weekly charts, and I thought that I'll share it with you. All right, so with this, I end tonight's view on the markets on a closing basis. I hope this will benefit you for tomorrow and the rest of the week to position yourself. Let me know how you've traded all this while, and is there any particular stock or any particular sector that you wish me to talk about in detail tomorrow. I'll be more than happy to take a look at it. Thank you. Good night.